Hey guys, it's Emma Figling with TYT Politics. I hope everyone's having a good Tuesday. I wanted to recap some of the great reporting done by Zach Carter of the Huffington Post. He reported on Democratic Senator Mark Warner, whose face you may know from the Senate Intelligence Russia investigation inquiries. So he's become a very popular face for the Democratic Party, but his policies are among the most conservative within the Democratic Party. I am no fan of Mark Warner for the most part, and I think that this particular story should make any progressive or anyone who wants the Democratic Party to represent progressive policies, I know, laugh along with me, very angry. So, do you guys know what payday loans are? I think that a brief overview would help understand why the story is so outrageous. So, it's a type of short-term borrowing where usually just one individual or an individual just borrows a very small amount of money for an extremely high interest rate, and they typically get cash from it. The loans are small, usually $500 or less, and President Obama has been outspoken about had been outspoken about how payday loans were predatory. Elizabeth Warren, Bernie Sanders, progressives have been against payday loans for a while, and they're predatory, short-term, high interest, and it traps borrowers in this kind of cycle of debt. And the people who seek payday loans are typically poor and desperate. So any progressive should be against this, right? Mark Warner is clearly not a progressive on this issue, to say the least. In late July, Warner introduced the ingeniously titled, that's how Zach Carter called it, Protecting Consumers' Access to Credit Act of 2017. The legislation would allow payday lenders to ignore state interest rate caps on consumer loans as long as they partnered with a national bank. So they can ignore state interest rate caps. They're already predatory loans, which only play on the poor and desperate. That's it. So in this bill, he allows for payday lenders to ignore state caps. The little regulations that they have, they're already horrific. But there has been some sort of pushback. The Consumer Financial Protection Bureau, the brainchild of Senator Elizabeth Warren, has been aggressive in trying to combat these payday lenders. Now Mark Warner says, I don't care. I want them to be able to prey on you more, right? According to consumer protection advocates, this could allow lenders to charge almost a 300% annual interest or higher. 300%. The article continues, although it has been generally overlooked amid the GOP's stumbling attempt to repeal Obamacare and its aggressive plan to slash taxes for Wall Street, Warner's little bill has a much better chance of making it into law than the Republican Party's marquee efforts. Companion legislation is scheduled for a vote in the House Financial Services Committee on Tuesday, where the bill has the backing of arch-conservative Representative Patrick McHenry of North Carolina and Representatives Greg Meeks, Democrat of New York, and Gwen Moore, Democrat of Wisconsin. McHenry of North Carolina is a Republican. Liberal Democrats with a history of sympathy towards the financial industry are also on board. Warner's Senate version is co-sponsored by Tea Party darling Pat Toomey, Senator Pat Toomey of Pennsylvania, and Senator Gary Peters of Michigan, Democrat. So if you're co-sponsoring legislation with Pat Toomey and you're a Democrat, perhaps maybe take a second look at what you're doing. But he's taking a first look because this is what he needs to do for his donors, Mark Warner. You are not supposed to serve your constituents. By the way, Virginia, really got to hand it to you. You have a real penchant for selecting horrific Democrats. Tim Kaine, complete disaster, so conservative. And of course now Mark Warner. And the governor that you selected, Ralph Northam, is as bland and as centrist of a Democrat as you can get. So centrist Democrats, Virginia's the place for you. Warner's bill has drawn opposition from consumer groups, including Americans for Financial Reform, the Center for Responsible Lending, and the Consumer Federation of America, along with civil rights organizations, including the NAACP and the Southern Poverty Law Center. So activist groups, not just financial activist groups for financial equality or financial reform, but African American rights groups, minority rights groups saying, this is outrageous. This cannot be passed. Zach Carter continues. Dozens of states regulate payday lending through usury caps, blocking loans with annual interest rates higher than a certain amount, often 36%. That is pretty high in itself. Payday loans usually take the form of a 2-week advance of a few $100s with a fee of a few $dozen. In 2013, the Pew Charitable Trust found that a typical payday loan was $375 with a $55 fee. Since the life of the loan is so short, in just 2 weeks, this fee works out to an annual interest rate of over 380%. In practice, though, it's usually much worse than that, since, according to Pew, a typical customer ends up repeatedly rolling over a payday loan, ultimately handing over about $520 in fees to pay off an initial $375 advance. That is the definition of a predatory loan. That I cannot believe that these are in existence at all. They are just to prey on the poor and desperate, people who need money right now. And they can't even think a week in advance about how much more money that is going to be. And Mark Warner, Democrat, wants to make it easier for those payday lenders to screw you over, to screw desperate people over. And how about this? Silicon Valley has been toying with the high-interest consumer loan market for a few years. Interesting. Silicon Valley and the Democratic Party. Seems like they are a little in bed with each other, don't you think? Lending Club, Prosper, LendUp, and other fintech companies have been billing themselves as hip, savvy alternatives to payday loans or pricey credit cards. They typically partner with a bank to avoid regulatory costs, and they are just as eager to bypass state usury laws and as are their more notorious competitors. So it's not a coincidence that Warner's bill is designed to allow these companies to bypass state laws, because Silicon Valley wants to do the same thing as well. And it's an up-and-coming, apparently, industry that the Democratic Party just wants to service. Because even though Silicon Valley has this reputation as maybe a more, a more ethical financial giant in this country, that they're just as much in the interest of making money as Wall Street and as Big Pharma. So of course, they're going to try and buy off the Democrats who are amenable to their interests. So in case you were wondering, Mark Warner's financial donors are as follows in terms of industry. His second largest industry donor in his career, securities and investment, $3.3 million. His seventh largest industry donor, business services, $887,000, around that. Then his next, eighth largest industry donor, miscellaneous finance, nearly $803,000, and 12 commercial banks, $555,665. The donors speak, Mark Warner listens. Preying on the poor. What happened to the Democratic Party of FDR? What happened to the Democratic Party of LBJ? Lots of acronyms right now. But the war on poverty. No. Mark Warner's more interested in the war on the poor. I thought that was the Republicans 101. Have a good day, guys.